We're half an hour away from the opens in Hong Kong, Shenzhen and Shanghai. You're watching The China Show. I'm Annabelle Droulers with David Ingles.
Good morning. Let's get to your top stories today. A cautious start trading in the equity markets in the region here. Investors bracing for Nvidia's earnings later on Wednesday, and also this assessment of this escalation in the Ukraine war.
Well, that conflict's entering a dangerous new phase with Kyiv's first strike on Russia using U.S. missiles and President Putin approving an updated nuclear doctrine.
Also ahead, the G20 summit in Rio ends in tension and disorder, with leaders failing to present a united front on issues including Ukraine and the Middle East.
And I'm Min Min Lo, live outside the Hong Kong court where former newspaper tycoon Jimmy Lai is set to defend himself against national security charges in his first public comments in nearly 4 years.
Welcome to the program. We're starting our show off today with some breaking news. The loan prime rates out of China, 1 and 5 year, as expected by most, if not all, economists, kept unchanged at the banking system. So 3.6% is your 5 year, 3.1% is your reference for 1 year. For banking, for prime clients of these banks, it's worth noting, just for context, of course, already at these levels, despite them being unchanged, are already at the lowest since inception. So this low rate story continues in the Asia Pacific, particularly as it pertains to the Chinese rates expectations market there. It takes us into the agenda today. So we are also in the window for, speaking of lending rate, the 1 year medium-term financing lending rate between the banks and the central bank. We could get that today. A couple of stocks we're tracking going into the open today. So apart from HKBN, which resumes trade today, and expect a pop there in shares. XPeng and GDS out with earnings yesterday. Massive move to the downside overnight in the U.S. We're expecting those two stocks to come under severe pressure going into the open today. Kuaishou and NEO are coming out with earnings today, so get you a preview of that. And, of course, the big earnings story, of course, will be not really in Chinese markets, but Nvidia. We're looking ahead to that as well going into today. Apart from that, havens, of course, given where we are compared to, 24 hours back on the Ukraine and Russia story. So gold at these levels, we're looking at gold mining stocks, of course, on the back of all developments in the last, 24 hours or so.
Yeah, and I actually think Goldman Sachs is one of those saying gold could touch $3,000 an ounce. But in terms of what we're seeing for the futures here today, China looking for another day possibly in the red. Of course, we haven't really seen any sort of traction being gained. You had earnings, we were just mentioning there some of the names they're looking for. But in aggregate, it's been a disappointing earnings season, and we haven't really had any announcements around stimulus this week either. So there's really not too much to tempt traders in this market right now. But let's change on, take a look broader picture here, because there's sort of two themes to track. On the one hand, we've got those Nvidia numbers. They're out later today, and certainly that's going to be a market-moving event. Very much want to understand what this company can signal, particularly in the rollout of the Blackwell server system. We had seen reporting from The Information, for instance, that there were going to be delays to that. So waiting for any details. That will be a major event and certainly direct the market action over the next few weeks. One of the key stocks for us. Today in the session as well, we're looking fairly flat right now on the broader benchmark. And again, perhaps that is that level of caution that's coming through. We've seen a bit of a flight to safety, David, after those events between Russia and Ukraine.
Yeah, entering a new phase, as they said. The reason why we talked about gold and havens, and, that includes things like the yen and the Swiss franc as well. So gold over 3 days, we're up 3%. As you can see on the price level specifically, we are nearing, if not already, topping the session highs that we had yesterday. Across the contract and futures curve here, we are also getting some gains still across the precious metal going into the Wednesday session here in the Asia Pacific. Now, we've also heard from many of our guests here on Bloomberg Television on what their thoughts are, what this escalation of the war in Ukraine and what it might mean for markets moving forward. Have a look.
The market has looked past a lot of the geopolitical risks.
A lot of these geopolitical headlines tend to be short-lived, and we would even argue offer up a pretty good entry point here.
As of now, at least, the reaction from markets is fairly modest.
You're seeing a bit of a shift here, but certainly nothing that's overly notable here, given the prospects for heightened geopolitical risk.
Geopolitics and politics is far more important for your strategic asset allocation than it is for tactical. Oftentimes, the way to actually trade politics and geopolitics is to fade the risks.
They're probably the biggest outstanding tail risk that is out there. But from an underwriting perspective, when we're thinking about investing, that's not our base case. It's not our core outlook.
Markets are still focused on the fundamentals unless we see a more meaningful escalation and or a more meaningful move in energy prices.
Let's bring in Herald van der Linde. He's head of Asia-Pacific Equity Strategy at HSBC. And Herald, let's just start off with these developments, Russia's war against Ukraine, what we've seen there overnight. Investors and traders have largely tuned out sort of the daily grind, but certainly we have seen that flight to safety as well. So do you see this sort of being a sustained reaction, or does it sort of just fade back into the background again?
Well, for a sustained reaction, we need to see how these developments is going to unfold, and I don't have any particular insight onto that. So I guess markets in Asia, at least, will continue to take that from a day-to-day sort of basis. But if you look at the underlying sort of fundamentals, what drives equities, which is, for example, earnings, the earnings exposure of Asian companies to that part of the world is very limited. So that particular impact is not there. Typically, the impact comes through a stronger dollar, higher gold prices, higher oil prices, and these sort of things. So that's what we really got to look for. Does that impact our part of the world, the Asian equity universe? And for the moment, that seems to be somewhat limited.
Yeah, and Harold, David here, and hopefully that remains to be the case, which I guess now segues us into some of your specific outlook for next year. And so you guys have put out this note where you've effectively ranked where you think markets in the Asia-Pacific will be this time next year. And I think at the very top of that, I'm almost starting to think, Harold, that you're a China bull looking at this. Just help us understand why China sits at the very top of this list.
Yeah. So the way I look at China at the moment is that it's a sort of trading market. So there's a trading range we look at in valuations, somewhere of about 8.5 on the low side, about 13 times on the high side. Now, what are the probabilities that we're going to go back to the lows? We're right now just below the middle, by the way. So what are the probabilities that we're really going to go back to the lows that we've seen in the dark days of for example, of COVID? I think with the recent September announcement, the policies that have come through, that probability has come down. What is the probability that we go higher? Well, the earnings are so-so, the green shoots that we see in the economy are so-so. There is something that is on the sideline and that doesn't always get the attention. There is $20 trillion in cash in banks in China. And people do that because they don't want to take risks. So if some sense of confidence comes back, only a little bit, that could have quite a lot of upside or impact on equities. So we shouldn't ignore that. The question is really, of course, does that confidence come back? And that's a bit more difficult to answer. We see how that's going to work out. But I still see more upside in this market than downside. That's really the case.
But that upside, you see that then being sort of more of a domestic-driven story, if you're saying that it's really going to come perhaps from people that have got cash in their bank accounts, this money that's sitting on the sidelines. I mean, we're seeing international institutional investors continuing to leave the market.
Yeah, so if you look at the Asia market or the Asia market, the dynamics are slightly different. So what we've seen international investors do, Asian portfolio managers, they have actually increased their weighting in China. They've bought into China. And that's pretty happened over, say, September. More recently, it probably stalled a little bit. But they bought into it. The global fund managers haven't really bought into that. But when I'm talking about that $20 US, that's a lot of money. That is really onshore in China. And that is not really moving that much yet. It seems that some of that money seems to be moving into bond funds. Some of it might be moving into equity funds. But if that confidence comes back and people say, well, you know, I got $100 in my bank account, but that's quite a lot. You know what I do? I'm going to make it $90 in my bank account and 10 I'm going to put in the equity market because things look a little bit better. That tends is quite big, because we're talking about large numbers here, $20 trillion in deposits. So that could have an outsized impact on the onshore market. So that's what I'm really looking for, that realignment in confidence, that it could have quite a big impact on the equity market. Is that the upside that I spoke about earlier on?
Okay, Herald, if the premises turns out to be correct, let me challenge that a little bit. What makes us think that that money goes into Chinese equity markets and not, say, the S&P, which some of these calls right now, the S&P might top 6,500, say, for example, this time next year. You know, a rising U.S. equity market tide doesn't tend to lift all boats. We both know that.
Yeah. So there's two things maybe to say here. The money that's onshore in China stays onshore. So they put it into deposits, what they do now, or they can put it into bonds, or they can put it into equities, or they put it into property. And at the moment, we know they're not really buying property. There's some early signs people go back into that market, but that's not really big yet. And they bought a lot of bonds. So they are remaining very, very conservative. But for those onshore investors, if you buy some Chinese banks, for example, you get 8-9% in dividend yields. That seems reasonable kind of investment to make. So that may entice them to go in there. But if you then go to the offshore market, yeah, then it comes to what is the relative attractiveness of, say, Chinese assets or Asian assets in general versus US assets. Now, the US market has, of course, been very strong, but if the US dollar remains strong and bond yields move higher and growth in the US remains stronger, yes, that's a struggle for Asian equity markets. That's clearly a risk for us. And that would be a negative. It's not our base case. It's a scenario where we're looking at, but that's something that we will have to keep in mind, because were that to develop, then the outlook for the Asian equity universe might be much more muted than what we have put on in the numbers at the moment.
I want to ask about your views on Taiwan and also Korea, because I noticed that you're underweight on both. And one of the reasons you're citing Taiwan in particular is because it looks more expensive compared to Korea. But do you really want to be thinking about these markets in a like-for-like scenario? Because when you think about the beneficiaries around AI, the AI theme going into 2025, Taiwan is absolutely the standout in this market. Korea, I can think of SK Hynix, for instance, but Samsung, the heaviest weighting, is very much seen as a laggard.
No, you're absolutely right. So we have a preference for Taiwan over Korea in our regional allocation for exactly those reasons. Taiwan is just a much better play onto AI. We did feel over the summer that probably AI hype was a little bit overplayed. But what you see now in Taiwan is a sort of differentiation in share price performance. Some of the key beneficiaries, the larger foundry companies, they continue to do very well, but the other ones have really lagged, some of the server makers or the component makers and stuff. Now, that's a very different story than Korea. And in Korea, earlier on the year, you will remember, you guys talked about this a lot as well, was about this value up program. Would that really drive these Korean companies to pay more dividends and share buybacks? And for the moment, that's, to be honest, not really happening. I do this at the top of my head, but I think about 3,500 companies were asked if they could submit some sort of value up proposal, and I think about 8 have done so far. Now, arguably, they're going to look for more details and what the tax implications are to come with detailed plans, but the enthusiasm by the corporates has been somewhat, I would say, muted in Korea. Indeed, actually, if you see companies paying dividends and doing share buybacks, that's Chinese internet companies, that's Singaporean companies, that's where it's really happening, and not so much in Korea. So Korea's got this sort of, that value up program is not really driving as people maybe initially hoped for, say, 6 months ago. And as you rightly say, so its exposure to AI and the DRAM cycle, is also not so fantastic. DRAM prices haven't done so well. So the Korean market just doesn't really look so fantastic yet at the moment. It's really going to go cheaper for us to say, well, now it's time to maybe go back into the market.
Yeah, Herald, we'll just flash for our viewers, too. So you're 23% upside, mainland China, 21% Hong Kong via the Hang Seng China Index. So far, we've talked about catalysts, cash everywhere. You mentioned the buybacks, for example, value up program. What about earnings? Because at the end of the day, this comes back to earnings. Which market do you think is pregnant with the possibility of giving us an earnings positive surprise next year?
Well, if it comes to surprises, the one market where I think the surprises have been negative is India. So the Indian earnings have not done so well. Chinese earnings are so-so. If you look in detail at the consensus numbers, actually consensus is forecasting for a pretty decent Q4 to come through, and that rolls then a little bit into 2025. So there might be surprises. I'm just worried that that probably is not really going to materialize. We've seen that before. The analysts really pushing the numbers into Q4 throughout the year and then thinking, oh my God, it's not really happening anyway, and then cutting the numbers. But we do see some green shoots. So probably the upside surprise is a little bit more in China. And I would say the downside surprise, to be honest, is more in India at the moment.
Herald, thank you so much. Let's talk again in the new year. Herald van der Linde, head of Asia Pacific Equity Strategy there at HSBC. Still ahead here and shows a look at cryptocurrency regulation under a potential how that looks under a second Trump White House. Charles Hoskinson joins us, the founder of Cardano, of course, and head of the blockchain firm Input and Output. He's been in talks with U.S. lawmakers. We'll be getting more details on what exactly is happening, what those discussions are. Counting down to the open of trade in Shanghai, in Shenzhen, in Hong Kong. The currency reference rate, bottom of your screens. The weather reference, top of your screens. The opening bell 14 minutes away. This is the China Show.
Season is here.
Third quarter earnings season, as we've been talking about, really in high gear.
Bloomberg is first to break the numbers.
We have some big earnings after the bell.
Earnings from Caesars crossing the Bloomberg terminal.
Mondelez is reporting Reddit, AMD, Snap.
Let's keep the conversation going.
With the smartest insights.
The bar keeps getting higher. 20% growth rate when your comps get tougher. How much can you beat and raise?
Continuing coverage on Bloomberg. Context changes everything.
Russia's war with Ukraine has entered a new phase, with Kyiv launching its first attack on Russian soil using US long-range missiles. At the same time, President Vladimir Putin has broadened guidelines on Russia's potential use of nuclear weapons. Bloomberg Asia senior editor Bill Ferries is with us. And Bill, this is certainly an escalation, but the ante had already been upped by North Korea sending troops to the aid of Russia. Talk us through these latest developments.
Yeah, I think from the U.S., from the NATO perspective, the arrival of those 10,000 North Korean troops over the past several weeks in Russia was a game changer in the sense that they felt like they needed to do more to push back on Russia's incursions into Ukraine. And this use, the first use of these U.S. ATACMS missiles, longer-range missiles that can strike further into Russia, this is really seen as helping stave off, I think, Russia's forces. Russia has been grinding away and picking up territory over the last several months. And in particular, Ukraine is focused on not only defending its historic borders, but also trying to protect this outpost it's built in Russia, in the Kursk region. They want to hold on to that as long as possible if it comes to some kind of truce talks, so that they can consider swapping that territory for territory that Russia has taken earlier in the conflict. So more higher power, higher caliber weapons being deployed on both sides as they jockey for the best leverage ahead of potential truce talks at some point next year.
Bill, just take us to the latest as well. This Washington Post report that President Biden has authorized the provision of anti-personnel landmines to Ukraine. The details of that report, please, and what does that tell us about what's next here?
Yeah, that report is just out in the last few minutes. It says, citing officials within the administration, that President Biden has approved the deployment of U.S. anti-personnel mines. These would be in those regions we're just talking about, where Russia has been slowly making gains. And the idea is to hinder that progress. If Ukraine has to pull back, that they leave those mines in place to slow the Russian advance. This is going to be a controversial decision even within the U.S. government. 160 nations have signed a treaty banning the use of landmines. The U.S. is not one of them. But the decision to deploy them now at the very end of the Biden administration is going to come under a lot of scrutiny. And we'll have to see how quickly Ukraine can make use of that if it has time to do so.
Bill, thank you so much. Bill Ferries there, our Asia senior editor in Singapore for us. In other geopolitical news that we're following this morning, SpaceX says its Starship has achieved new goals during its 6th major test launch, but the company scrapped the plans to catch the booster with mechanical arms. Now, the super heavy rocket, of course, performed a controlled landing in the Gulf of Mexico, and the Starship capsule survived re-entry into the Earth's atmosphere. Now, U.S. President-elect Donald Trump was at the launch alongside SpaceX, as you can see there, CEO Elon Musk. Now, sources say Huawei's ambitions to create more powerful chips for AI and smartphones have hit major snags. We're told the firm is designing its next processors with the same 7-nanometer architecture that's been around for years. Now, that means its chips could be stuck with aging technology until at least 2026. Washington has slapped sanctions on Chinese firms to hobble China's chips and advanced tech capabilities. We're just under, 8 minutes away from the opening bell. We're called lower here on the Hang Seng and your pre-markets. We're slightly weaker as well on the currency, lower as far as bond yields go. Plenty more ahead. This is The China Show. All right, going into the Wednesday Open today, almost like the temperature out there, which has dropped. And as you can see, prices are dropping today. Suffice to say, we're getting to a level of the outside temperature where, funnily enough, if you're not in Hong Kong, this might sound funny, ski jackets are probably going to come out soon. Boots are probably also going to come out soon. We're at 18 degrees still, so just to underscore that paradox. Anyway, that's the open. Ahead of the open. Analyst actions today. What do you have, Bill?
There's some interesting ones, actually. One that stood out to me was Prada this morning because it's been raised to buy at Bank of America. And I think that's an interesting one, given just the sentiment we've seen around luxury names in particular and the pullback in the China consumption story. So that's one to watch, certainly at the open. ADRs for Xiaomi also in focus because that's been also raised up. And we actually did see those better earnings coming through. Cathay Pacific as well, rated a new buy. But let's take a look also at how some of the movers are going in the early trade today. XPeng, of course, a big notable one, given we had the earnings.
Yeah, we had earnings, and then I think we had a big drop of about 4%, I believe, in the U.S. session overnight. So, I mean, we did have a narrower loss, but I think it's the pricing which has spooked the market to suggest that maybe margins might still come under pressure.
Yeah, but margins, it's interesting because we actually saw the best margins going back several years. So, anyway, investors are concerned about this one for the company.
They're never happy investors.
GDS as well, one to note, that's a cloud
data company based out of Shanghai. This is a CapEx story, too. They've increased their CapEx, which I think spooked the markets, too.
And HKBN, of course, because we've got those buyout talks now being confirmed by the company itself. We've seen that jump there as trade resumes. But more ahead with the opens. This is Bloomberg. Welcome back. You're watching The China Show, counting down to the start of trade here today. And certainly if there's sort of an overarching theme for Chinese equities, it's failing to recover those October highs. That's certainly the big question, whether they can do it. Have we really truly found the floor for Chinese stocks from here?
Yeah, I think the MSCI China has retraced, if not 50%, almost 50% from the recent peak. And, you know, while markets wait for more catalyst, I mean, certainly the conversations we were having yesterday at the HKMA forum was because policymakers might be waiting for what comes out of the White House next year, we might have to wait for those catalysts to even come, right? So in other words, range bound for now. And some of the earnings, and we're wrapping up earnings season, by the way, as well, have really not given us sort of broad-based encouragement as far as guidance is concerned. We are getting some bright spots starting to show up. That's also relative, of course, to data and the low base as well. Just keep that in mind, of course, as we go into the final part of the year. And, you know, who knows what we might get out of the Fed and out of Nvidia, which might actually provide a catalyst for broader markets to to continue to test highs as well. The open in China, though, onshore is down 0.4 of 1%. It's worth noting that we did have HSBC on a couple of minutes back. They're most bullish on China, mainland China, apart from among any other market in the region for next year. So 23% upside is where they think the A-share market goes, mainland China. I think it's FTSE China, which they're using as a benchmark there. As far as Hong Kong goes, it's a 21% gain here. We're looking at casinos in particular today on the back of this report out of TDM that we might see every permanent resident in Macau receive 10,000 patakas for next year. Speaking of earnings and speaking of some deals, HKBN resuming trade today. That's up, given, of course, the conversations with China Mobile, up 12.5%. I believe the price was at 5, so the difference might be the premium or the discount, which the uncertainty that the deal goes through, who knows. GDS Holdings is down 20%. This is the big mover in Hong Kong today. Unsurprising given the big move down in its U.S. traded shares overnight. This is an earnings story, and it seems to be that markets are scooped by the higher capex number that the company gave out. And speaking of earnings, XPeng was out 4% down. The narrower loss, one of the best margins, I believe, Bell.
Since it listed in 2020, actually.
Yeah, but it's a pricing, I think, which is...
Well, yeah, they're cutting some of their pricing. They've got that lower-end model, and I guess the question is, if you sell more of those lower-end models, how does that impact your margin overall as a business?
Okay.
And so that certainly came through, because actually the earnings, again, weren't too bad, but you think about how we've been over the earnings season, and mostly people have been left disappointed. But it's not just a story around the equity picture, of course, in Hong Kong today. It's still very much what's happening in the court system as well, and sort of what's perhaps the final chapter in the pro-democracy movement in Beijing. Today, former Hong Kong media mogul Jimmy Lai will be taking the stand to defend himself against national security charges. This is a case that's been closely watched not just in Beijing but also the West, and Lai has been someone who hasn't spoken publicly in nearly 4 years after being detained under the China-imposed laws. China correspondent Min Min Lo joins us from outside the West Kowloon Magistrates Court. And Min Min, we know that we're awaiting the arrival of Jimmy Lai, but tell us what's exactly happening on the ground.
Hey Annabelle, it's been raining all morning since we arrived about 3 hours before the court session starts. There was already a long line of people really wrapping around the side of this court building with their umbrellas out, so you can tell how much anticipation there is for this hearing. And we did see a number of prison vans, armored vehicles, heavy police presence here. It's possible Jimmy Lai was already heading in one of those prison vehicles. We're about less than half an hour from the start of the proceeding here, and Jimmy Lai, as you said, is the first time we're going to hear him speak in court. The last only 2 words we've heard from him is not guilty, and he is charged with 2 counts of colluding with foreign forces, 1 count of publishing seditious material. This is related to his role as the founder of Apple Daily, that pro-democracy newspaper that was forced to shut down in 2021. He's accused of colluding with foreign forces to advocate for international sanctions against Hong Kong and China, and for using the newspaper to get people to go out to protest against their 2019 proposed extradition bill. So this will be closely watched. The court is expected to hear him present his evidence for maybe another 3 to 4 weeks, and it could possibly extend into next year as well.
Min Min, thank you so much. Min Min Lo, our China correspondent. Programming note, this time next hour on the China Show, Emily Lau, former LegCo member and Hong Kong Democratic Party member, will be joining us to talk us through, of course, taking us through this conversation here. Right, in some other corporate news that we're tracking at this point, CATL is in talks to establish battery recycling operations in Europe as the company prepares to start cell production in Germany. Now, the Chinese company says it is also scouting for local raw material suppliers and aims to hire 2,000 to 3,000 people. Its regional operations chief says the aim is for a closed loop in Hungary from manufacturing all through to recycling. Now, Norinchukin Bank is warning its annual loss may exceed, get this, the previous $9.7 billion projection as it steps up the disposal of unprofitable foreign bonds. Now, the Japanese lender wants to offload around $64 billion worth of U.S. and EU government debt this fiscal year. Now, it's trying to stem losses from wrong wave bets on interest rates.
Well, the CEO of the world's largest zinc smelter, Korea Zinc, says he's working hard to regain shareholders' trust after being forced last week to scrap a $1.8 billion share sale. Our Chief North Asia correspondent, Stephen Engel, joins us now from Seoul. And Steve, you had the chance to sit down for an exclusive interview with the chairman of this company. It's certainly been caught up in a battle for control, but what did you learn out of that conversation?
Well, absolutely, that this has, grabbed the attention, obviously, of the chaebol, the big corporations, conglomerates here in Korea, because hostile takeovers are not new to South Korea, but this time it is involving global private equity. So you have the largest shareholder, Yongpong, which was part of the founding families of Korea Zinc. They've teamed up with MBK Partners, a private equity firm. And then you have, of course, the other co-founding family, the Che family. Yoon Che is the CEO and chairman, whom I interviewed. He's teamed up with Bain Capital to rebuff that takeover bid. So it is a bit acrimonious, no doubt, over the last couple of months. But Yoon Che, in that exclusive, wide-ranging interview that lasted more than 2 hours, he told me that, yes, there was a tactical mistake with that $1.8 billion share sale, which he had to scupper just last week. He's offered to essentially resign as board chair, bring in an independent board chairman, and also a foreign board director to improve governance, which is a demand, of course, of the parties that are trying to take over Korea Zinc. He's also vowed to increase the dividend, but more importantly, he says he's going to win this fight. And there's going to be an EGM required by the end of this year where shareholders will be able to vote. I began that long, wide-ranging interview by asking him what mistakes he possibly made over those last 2 months since the takeover bid first was launched.
That's a tough question. One real mistake was the rights offering. Yeah, we misread the market. It was perhaps a smart move, but definitely not the wisest move. It was a tactical error on our part, not reading the market, not expecting the reaction of the market. People who complained, rightly so, were the people who were our current shareholders whose, share prices dropped upon our announcement. And perhaps the beneficiaries of the rights offering were yet existent. I mean, they were to be our future shareholders. So, we definitely miscalculated that. We definitely put the cart before the horse, as they say.
Are there any scenarios that are forthcoming that would, in your mind, force you to step down?
If we feel that there is somebody who is better fit to run this company, I will be happy to step down. It will be my duty to step down. It is not, especially for the last 2 months, it has not been the most enjoyable experience running this company. But it is a duty. It is a duty that I enjoy. I do not serve as the CEO of this company because I own a small percent of this company. I believe I'm a CEO of this company because I'm the best person to run it, and I have immersed myself in this job less than 20 years. For some people, that might be long, that might be short, but it was a total immersion, and that is true not only for myself, but all the core members of this business. And one really, truly needs to be in a state of total immersion in order to run the company like Korea Zinc as we do.
Well, it's going to be a fascinating next month, of course, until that EGM and shareholders will be able to vote. There's a lot of moving parts right now. The National Pension Service has about a 7% stake. We don't know how or where they will align their votes. There are other avenues, of course, that he's exploring. He will go all out, he says, of course, to defend and rebuff this takeover attempt. And in the next hour, we're going to go even further beyond this takeover saga and talk about the geopolitical segmentation, of course, of supply chains in key elements like in zinc and nickel and others that, of course, China has a big control over. But again, keep in mind, Korea Zinc is, the biggest zinc producer outside of China. And with the Trump administration coming back in, there are a lot of questions about where there's going to be alignment and supply for key elements in the new economy. Back to you guys.
Steve, fantastic there. Stephen Engel, fantastic work in Seoul, our Chief North Asia correspondent. From one corporate story that's gripped one market to another that's gripped the other market, 7 and 9. We're talking about corporate Japan at this point in time. Shares are up 8.5%. 27 million shares are already traded. We're not even 2 hours into the session there. This report out of NHK that the founding family is looking to complete a deal here to take the company private by the end of its fiscal year. So that's just barely in a couple of months from now. Alice French is in Tokyo for us with the details. Alice, what more do we know about this?
Yeah, so like you say, 7 & I's stock is up around 8.5% now. We saw it rise as much as 11% this morning. And this is on a report from NHK yesterday that the founding Ito family is looking to raise funds for a buyout proposal by the end of this fiscal year, so by February 2025. And this is in the case that Couche-Tard did become more aggressive with its buyout proposal. And the plan is to raise around 8 trillion yen with the help of other funders, including Itochu Corp. So we are seeing 7 rising a lot on this. Some other retailers, including Pan Pacific, are also up today. 7 & I has been consistently in the top 3 rises on the topics this morning. And I think this is really indicative of how much more important individual stock moves are becoming to the market as a whole. The topics today is kind of fluctuating. It was up a little bit earlier. It's now down around 0.2%. But we're seeing these kind of individual stocks really gaining at the top of the index. 7 & I is one. Tokyo Gas is another. Today, we had news yesterday that activist fund Elliott has bought over a 5% stake in them, and they're really climbing on that too.
Yeah, certainly we are seeing some big gainers. Tokyo Gas, for instance, jumping the most since 1987 today. But that was Bloomberg's Alice French there in Tokyo, and we're going to have a lot more ahead. This is Bloomberg. We're taking a look at some of the activity in the crypto space because I think really Bitcoin grabs all of the attention really following the US election. You take a look at some of the gains, though, we've had across the landscape. And, yeah, Bitcoin's risen around 46 or 47%. But that line in white there is Cardano, which has actually far outpaced it. It's a gain of nearly 100% since the vote back in early November. So the reason for that, of course, we know Doge, for instance, has really risen. That's the Elon Musk link. The reason Cardano perhaps is rising, or one of the factors being attributed to it, is because the founder of the token, Charles Hoskinson, is report speculation in the markets. Perhaps he's having close talks with some US lawmakers.
Might play a role.
May play a role. But we want to speak with him now.
Yeah.
Charles Hoskinson, co-founder and CEO of Input Output. And as we said, the founder of the public blockchain platform Cardano. And Charles, we want to get started with these talks. I know you had an Ask Me Anything session the other day saying that you'd had these discussions ongoing. Talk us through exactly what those discussions look like and who are you speaking to in particular?
Well, there's a lot of things going on right now. It's anytime there's a presidential transition, it's a very complex affair. And actually, the Treasury Secretary has yet to be selected, and they're kind of winnowing down. So that sets all crypto policy. So right now, most of the discussions are with the legislative branch. I'm having dinner tomorrow with Senator Scott, and I've talked to numerous senators who are in the banking sector, basically figuring out how the regulation is going to work. And we've had some discussions with people transition team about what they want to do with a crypto committee. And if it's going to be a czar or if it's a commission and what exact powers and how exactly does that work. And it's not exactly clear in how it's set up on the executive side. But on the legislative side, it's very clear what they want is to pass a law. So there were several attempts already in 2023. FIT 21 was the most successful, which passed the House, but it did not enter the Senate. And in the Senate, there was a bill in 2022 called FIA that was by Senator Lummis and Senator Gillibrand. So right now there's some reconciliation of what does the executive branch want and what does the legislative branch want. What we've been told by the executive branch is Trump has a mandate that he wants America to be the #1 place to found and run a cryptocurrency business. There were also several campaign promises they're trying to connect to. For example, the strategic reserve for Bitcoin concept that also Senator Lummis is a big fan of. And there's a lot of things around asset classification that have to get resolved. The security commodity debate and what power should be reserved for the CFTC and the SEC. So it's still very early days, and we'll know a lot more in 60 to 90 days about how much level of broad industry participation is going to occur at the executive branch side. But we're already in talks with many people on the legislative side, and they're going to move forward as a co-equal branch of government with or without the executive branch to pass a law.
Yeah, Charles, David here, just to maybe pick up on that too. Is there a sense from the senators that you're speaking with that this time around there will be support to get this enshrined into law, not so much, say, an executive order, which we all know, of course, the former might have more lasting power than the latter?
Yeah, the challenge is not will the law get passed. I think there's a very high probability that that's going to occur. The challenge is what is the scope of it? Is it strictly going to live within the auspices of asset classification, or are they going to be more ambitious and talk about custody, taxes, stablecoins, the strategic reserve, the DeFi stuff, the rules for custodial wallets and non-custodial wallets? There's a broad room of things that cryptocurrencies can touch, and the more ambitious you are, the more you can get done. But the problem is the higher the probability it gets jammed up through either some administrative issue or it just doesn't simply pass committee in the lawmaking process. So I think there's a very strong bet that we're going to resolve the is it a security or not a security issue in 2025 and kind of rein in what's been happening over the last 3 years. It's a little bit more milky when we start talking about complicated things like DeFi, because less and less of the cryptocurrency companies are directly involved in that. And also Wall Street has very strong opinions on these types of things because in some cases it competes with pre-existing businesses and it's not clear how to regulate these in a decentralized way. So that's why a commission is helpful, because you can establish a baseline across the entire industry of where have people run into problems. And also you can have that question of normalizing U.S. regulation with international standards like MiCA in Europe or the ADGM in Abu Dhabi or what the JFSA has done in Japan. And it's very important that you don't develop U.S. regulation in a sandbox, because cryptocurrencies are intrinsically global. Many cryptocurrency companies, mine included, have employees in dozens of countries. We obviously have lots of users, and Cardano in particular has over 100 countries. Ethereum and Bitcoin are even more. So you can't just think in a U.S.-oriented approach. You have to ask, well, how will these be interoperable with each other? So only through the executive branch can we get that level of international coordination. And then the lawmakers are here to serve, and they're very cooperative with the Trump administration, with the upcoming House and Senate. So I don't think there's going to be an issue getting a law through. It's just a question of how ambitious does that law need to be.
So you're saying that there's going to be some sort of commission established for this? I mean, you talk about sort of what's happened in the last few years, and I think many people would look to that regulation through enforcement actions, which of course comes down to the leadership perhaps of Gary Gensler at the SEC. There's talks of him being replaced. Who do you think is most likely to replace him? And is it the SEC that ends up regulating the vast enterprise of the crypto landscape?
So first off, it's hard to pick a commission or even talk about a concept of is it a czar, is it a commission, is it a series of recommendations, until the Treasury Secretary has been selected. That's kind of the big thing, because there's some deference to that role because they're the primary oversight body of all the agencies that we've had problems with historically. Second is the question of should the Treasury Department decide that, or should it be directly decided by the president? And these are some of the discussions I think are ongoing. And if there was a czar, I would advocate a gentleman like Brian Armstrong, for example, to be that person, and then to build a subcommittee structure where subcommittees basically sit under by topic. So you have the stable coins, the exchanges, DeFi, and these types of things. But again, it's very early days. And so I think it's probably going to get resolved within about 60 to 90 days. As for the question of the SEC, technically Gary Gensler doesn't have to resign. Although there's a precedent that when a new president's elected from opposing party, the chairman does resign, or at least offer that resignation for the president to have the ability to pick a replacement. And that's what we saw with Jay Clayton, for example, Gensler's predecessor. And if Gensler follows tradition, he should do that. As for who replaces him, that's a complicated affair, because the most qualified people also potentially have a bit of conflict of interest because they hold crypto and they're in the cryptocurrency market. And there's a lot of other things that are beyond crypto that are going to be considered with the chair. As you know, Gensler's also had some attempts to weaponize the SEC for environmental policy and other things outside of the scope of crypto. So the grievances go far beyond our industry in terms of the conduct there. So ultimately, these are conversations that would have to be held with the incoming Treasury Secretary and Trump's people, and they're far beyond my pay grade. I have no idea where they're going.
Far beyond your pay grade. All right, Charles, I hope to speak with you again, because I know also you were saying this next 60 to 90 days is going to be really critical for seeing how everything comes together. But that was Charles Hoskinson there, co-founder and CEO of Input Output, and we'll have plenty more ahead. This is Bloomberg.
Welcome back. One stock that we're tracking, and for very obvious reasons on your screens in particular today, is stock listed in Hong Kong, 89% down. This is a company that designs, manufactures, and sells phones and components. Effectively, what we're hearing so far, and by the way, scant on detail here, the regulator, the SFC, has warned of shareholder concentration, right? And, there could mean many, many things. It could mean divestment. It could mean we might need to see... might is the operative word here. Some major shareholders maybe look to change some of their holdings, which I guess addresses the underlying issue. In any case, of course, the market is reacting. It's worth noting as well that the stock, of course, doesn't really trade a lot as far as turnover goes, so this could be exacerbated as well by some sharp moves given the news flow so far. That's the story there. We'll get you more on that in a moment. Dashboard's looking like this. About 24 minutes into the opening bell, and we're looking at declines, broadly speaking, across these Chinese equity markets.
Yeah, a lot more coming up in the next hour as well. We're going to speak exclusively with the London Stock Exchange Group CEO David Schwimmer about his growing business in China, and later on, the Hong Kong Democratic Party member and former LegCo member Emily Lau gives us her take on the Hong Kong 45 sentencing under the national security law. Welcome back to the China Show. Looking at the HSI, well, actually, we're looking at a very dreary day for Hong Kong, but stocks-wise, it's kind of trending sideways today. Low volumes across the Asian equities. We're about 40% lower than where we'd typically be on a 20-day moving average basis, and it does seem like there's maybe just a sort of note of caution or sitting back, because not only have you seen that escalation in the war in Ukraine with the Kyiv firing into Russia, but in addition, you're awaiting what's really the behemoth in the market, and that's Nvidia's numbers. And what do we get coming out from the company, not least around what they signal for the Blackwell server ramp-up?
Yes, given I think the last update from the company on that was there was a delay, and I think we were having a conversation with Jensen Huang, right, around whether or not the holdup was in the technology itself or sort of the supply chain. And what sort of demand he's seeing from that as well, because that allows them, I guess the markets to
the demand is there, and we're actually hearing it could be more of a design issue. We've heard from a number of suppliers really saying that they are prepared to scale, but we are hearing issues around overheating, for instance. That was reported by The Information earlier this week. And actually, side note, Jensen Huang is coming to Hong Kong on Saturday, so we'll see. Can we get any sort of action or views from him on the ground here?
Yeah. Is he going to go for a hike, you think? It's hiking weather.
We're hearing it's hiking weather. That's definitely been a conversation as well.
Yeah, I mean, the weather is cooling quite quickly. In fact, the mercury dropped quite substantially this week. To Bell's point, it's a dreary morning here. It's rainy out there as well. As far as market goes, right, so we have two things on mind, Nvidia and, of course, what's been taking place, what took place, and hopefully that remains past tense in Russia and Ukraine. A look at some of the related assets there. And generally speaking, after 12 hours of the story, markets have, again, they've tuned out, they've tuned in for a couple of hours, then they've tuned back out. Gold, though, is holding to some gains, although we're not seeing the same magnitude of gains here in the likes of oil, I think, which is up 3% yesterday. Asia ex-China is looking like this. Broadly speaking, we're trading sideways, if not lower, on most benchmarks in the region. The Treasury curve 2 and 10, bottom of your screens there, we're down about 1.5. On the 2-year, we're down about, give or take, about 1 basis point. So nothing much happening as far as that is concerned. Some dollar weakness is coming through. As you can see, the euro is slightly bid going into the thick of the Wednesday session. Let's bring in Mark Cranfield for more color, if there is any color, to these markets today. Our MLive strategist. Mark, maybe we can start off with geopolitics and Ukraine and how quickly this story has come and gone.
Yeah, I think it just reminds us that there's a really high bar for traders to take significant positions on the back of a geopolitical event. So what we saw happen yesterday was that treasuries did get a bid very briefly. The yen and the Swiss franc did as well. And there was a bit of weakness across equity markets. All of those things reversed pretty quickly. But I think the most significant one there is the treasury market, because of all kinds of havens we've seen in the past few years, treasuries have probably been the most consistent in terms of when something has been unnerving markets, treasuries get a bid very quickly. And yet that was reversed within the space of a few hours, which suggests that, of course, there was some help from the sense that the Russian foreign minister did dial back some of the remarks made by Putin. But it just shows you that traders really need to see something pretty dramatic before they're willing to put big bets on it changing the direction of a market. Clearly, the most important thing for the Treasury market at the moment is what kind of policies to expect from the next US administration and who is going to be the Treasury Secretary. Is it going to be somebody with market credentials that investors really believe is a safe pair of hands? Or is it going to be one of these choices of somebody who is a friend of Mr. Trump, but not necessarily ideal for the job? So markets really want to see that as well. And of course, they're worried about what happens to fiscal spending next year as well. Those are much bigger concerns than whether or not there's a bit of rhetoric in terms of geopolitics in the short term. So it just shows you, again, it's very hard to make money unless something as serious, for example, as when Russia invaded Ukraine in the first place. That was such a surprise and such a significant event that people could trade for a few weeks on the back of that. Otherwise, it's just very difficult.
Mark, we're also starting to get more look-aheads into 2025. HSBC just put out this report. In fact, we were speaking with HSBC last hour. I want to get your thoughts on Chinese markets. And they think that, I'm looking at the year ahead in 2025, 20 to 23% upside is what they're pricing in on mainland China and Hong Kong. What could cause that report to be, how could they become correct, I guess is my question, and what could cause this report to become less than the paper it's printed on?
I think on the positive side, investors want to see the Chinese authorities not relaxing at all on all these promises they've made about the stimulus. So we've seen a number of developments since September, both from the government side on the fiscal issues and from the central bank, the PBOC. Taken together, investors have taken some comfort from the fact that they're finally working together. They're really determined to make sure the Chinese economy grows strongly and they maintain an easy monetary policy. All of those things together are a very good backdrop for helping people move towards the equity market in China. So that in itself is a very positive development. But people will need constant reminding that it is going on. They'll need to see further interest rate easing as well from the PBOC, because against it, as everybody knows, there is a risk we could be getting more tariffs imposed on China as well. And the international situation will be unfavorable for investing in China. So you've got this trade-off between the two things. If the Chinese authorities can continue to maintain confidence, it will go a long way to keeping the money in there. And a lot of money has flowed into China in the past 2 months. And it's also proven to be a better bet for investors to keep their money onshore in China, because you can see already that people are losing interest in the dollar-denominated ETFs. We've seen big outflows on China-focused ETFs in recent days. And that really is a messaging there. If you want to have the best chance of getting something out of China, you need to move your money onshore.
Mark, we've got the Nvidia numbers out later today, and certainly this is a market-moving event. But how high is the bar today for the company? Because we had the second quarter figures, and even though the results were pretty solid, we still saw that drop because it just couldn't meet the loftiest of expectations. What sort of clearance do we need to see?
It's always a high bar for Nvidia, but they've beaten it many times. What helps a lot this time around is that a lot of the people, companies related to Nvidia, people that do business with them, have shown that the order books are very good. So it suggests that Nvidia is going to give a positive outlook. You mentioned there may be some issues with some of their new products, that they may need to tweak some of those. They'll need to explain that, of course. But certainly what you hear from people that do business with Nvidia is pretty encouraging. And they've consistently shown that demand, as the CEO has said before, demand for AI products runs for the next couple of years. It looks as though he's got a great order book going well into 2026. If he confirms that, then people will be happy. So within that context, it's a high bar, but Nvidia tends to beat high bars anyway. So it'll be a surprise if Nvidia doesn't help the market out today. What people should also be watching for is developments in relation to Tesla as well, because in simple terms, Tesla has probably become the most important single stock in the US market. It has risen so much money has been sucked into Tesla that anything happens there could derail the market. But for the time being, of course, everybody seemed pretty happy with that stock.
That was Mark Cranfield there in Singapore, our Bloomberg MLive strategist. And shifting now to Hong Kong, where former Hong Kong media mogul Jimmy Lai is taking the stand in this hour to defend himself against national security charges. It's a case that's been closely watched in Beijing, but also, of course, the West. And Lai has not spoken publicly in nearly 4 years after being detained under the China-imposed laws. Our China correspondent Min Min Lo joins us from outside the West Kowloon Magistrates Court. And Min Min, share an update of what's happening behind you.
Yeah, it continues to rain all morning today, and the court hearing is supposed to begin about 5 minutes ago. We are told that Jimmy Lai, our reporter inside, saw him being led in by a police. He seems to be in good spirits, smiling and waving at the audience, some members of the audience waving back at him as well, but it seems like the judges are late, so we're still waiting for the proceedings to begin. But this is the first time that we're going to hear him testify in court in about 4 years, ever since he was put into solitary confinement in December of 2020. He was denied bail after being arrested in August of 2020, and he's being charged with 2 counts of conspiracy with foreign forces and 1 count of publishing seditious material. And again, this is related to his role as the founder of Apple Daily, that anti-Beijing, pro-democracy newspaper that was forced to shut down in 2021. He's accused of advocating for international sanctions against Hong Kong and China, and for calling people to go out to protest against that anti-extradition, against the proposed extradition bill in 2019. And this court hearing could go on for several weeks yet. It's expected to go on perhaps into next year as well.
Min Min, I mean, you were there yesterday as well, but for a different reason here. Can you give us an update of what we've seen and heard so far from the international community here, as far as reaction goes?
Yeah, I mean, we were here yesterday, we're here today, and I noticed that it seems like there's a little bit more international media presence here today, following this case very closely. And it's certainly not going to fly under the radar internationally, because you have the British Prime Minister on Monday raising the issue of Jimmy Lai's deteriorating health with President Xi at the sidelines of the G20 summit. You have President-elect Donald Trump pledging to try to secure a release for Jimmy Lai. You have the European Parliament writing an open letter calling for the immediate and unconditional release of Jimmy Lai. And of course, this came hot on the heels of the mass sentencing of those 45 pro-democracy activists yesterday that already drew condemnation from the likes of the US and Australia. Beijing already responded, saying that these Western criticisms are trampling on the spirit of rule of law. And we know Beijing is unlikely to bow to international pressure. It has said that this national security law is essential to maintain stability. At the same time, remember that Jimmy Lai, he's not granted a jury trial. He's being tried by 3 judges handpicked by the chief executive. At the same time, he was not allowed to hire the lawyer of his choice. The top British lawyer, Timothy Owen, was barred from representing him after Beijing issued the first interpretation of the national security law, confirming that the power to bar foreign lawyers in such cases rests with Hong Kong's chief executive and that powerful national security team.
Min Min, thank you so much. We'll be back with Min Min for any updates. Our China correspondent there, just outside the courts here in Hong Kong. Just ahead here on the China Show, LSEG is coming on, and lots to discuss with what it pertains to the business, how it looks, what's the outlook for next year. David Schwimmer joins us in a couple of minutes. This is Bloomberg.
Season is here.
Third quarter earnings season, as we've been talking about, really in high gear.
Bloomberg is first to break the numbers.
We have some big earnings after the bell.
Earnings from Caesars crossing the Bloomberg terminal. Mondelez reporting Reddit, AMD, Snap.
Let's keep the conversation going.
With the smartest insights.
The bar keeps getting higher. 20% growth rate. When your comps get tougher, how much can you beat and raise?
Continuing coverage on Bloomberg. Context changes everything.
Welcome back. You're watching the China Show. Let's turn our attention now to the global IPO space, what it's been like, what it probably looks like going into the new year here. So global IPOs have topped $118 billion so far this year, with about a month and a half left, give or take. Asia-Pacific region taking the lead here, ahead of North America and also Europe. Now, their research shows that APAC has basically contributed 46% of the worldwide total so far in 2025. Hosting 271 new listings in the third quarter alone. Now, in terms of how much money that's actually raised, the Nasdaq raised almost $10 billion last quarter. That's ahead of other exchanges, including London. Why do we single London out? Joining us exclusively here on set is David Schwimmer, CEO at the London Stock Exchange Group, is in the region. And thank you for taking the time to visit us here.
Thanks for having me.
How do we fix that chart? What's the plan? How do we get listings up and running? More listings.
You've seen a pretty subdued market for IPOs on a global basis. Yeah. In Hong Kong, in New York, in London.
Fair.
And we're starting to see that pick up in different regions around the world. It's not surprising that we've had a pretty subdued environment, given concerns about the macroeconomic factors, concerned about a lot of the geopolitics, uncertainty around elections. And as we're working through a lot of that, I think we're seeing the pipelines build. And we're certainly seeing the pipeline build in London. I can't speak for the other regions, but it seems like the activity is picking up.
Yeah.
Share more details on what that means when you say the activity is picking up, in terms of how many number of companies in the ballpark, the types of companies as well that could be looking to come to the exchange?
Well, first point to make is that actually the markets have continued to be very healthy and very robust in terms of capital raising. So, for example, in London, we've seen well over 20 billion. I think it might be over 30 billion of capital raised. That's not just in IPOs, but in secondaries as well. So the market's been very healthy, a lot of capital available. If you are thinking about a new listing, you want to do it in what's seen as a supportive environment. And so I think that's where a lot of the macro has been relatively less supportive over the last couple of years. But that's starting to improve now as some of the uncertainty goes away, as some of the of course, the global environment continues to be complex, but I think companies are looking to access the public markets again. So we've seen some recent IPOs in London. We have a healthy pipeline building, and look forward to seeing that play out.
Shein. When? How? What's happening?
I tend not to comment on companies in advance of any potential IPOs. But I think London is clearly a very attractive environment, strong regulatory regime, supportive environment, non-politicized environment in terms of the regulatory regime there. So we look forward to welcoming a number of companies to London.
Is that actually the play for LSEG then, in terms of, okay, you're not the US, and you've also got reasons to be attractive for not being Hong Kong as well?
So we are by far the most international listing destination. And that if you look at where the capital comes from that goes into UK listings, more international than the US markets, really the most international in the world. And so for companies that are interested in accessing international capital, interested in working with both receiving investment from, but also working with partners, customers serving in many different regions, London is a very healthy and receptive listing destination for those kinds of companies.
And speaking of being international, I think we've done, and you've probably seen our report, that there are discussions, I understand, that LSE is looking for potential rule changes. So there are stocks that are non-denominated in sterling, for example, and there's a conversation, you tell me what's happening, of maybe getting those stocks into major benchmarks. Can you comment on that?
So let me take a step back. Sure. We've seen very significant rule changes on the London Stock Exchange over the past few years, but culminating in some major changes implemented this summer. And these go through a number of different areas, ranging from allowing dual-class share structures to lowering the requirements for free float upon IPO, consolidation of different listing segments, making it easier to use the equity currency in M&A. I know it's many different aspects of the rule set that have been changed. And we've seen that be supportive for companies coming to list in London. And I think we're continuing to work with the regulator, continuing to work with the government on various other rule changes. And I think that's continuing to improve London's competitiveness as a listing destination.
Including this rule? Is that part of the conversation?
Well,
sorry, just to poke you a little bit, too.
No, and the rule you're referring to, I think, is probably referring specifically to index inclusion. Is that right?
Yes, index inclusion for non-sterling denominated.
Right. So we have the FTSE and Russell indices are part of LSEG. But they also have their own governance, and they run their own consultations, and they consult with the market about their own rule sets. So I don't control that, but that's something that they work through.
Well, we'd love to get your comment once we do have more details on that. The other, and I'm pressed to ask you about things outside your control now, the stamp duty. I know your stance in that as well. Is the expectation, can we have a realistic expectation that the people who decide on the stamp duty, do you think they'll get rid of that anytime soon?
You're talking about the stamp duty in the UK markets?
In the UK markets.
I would say it clearly didn't make the cut in the recent budget in terms of removing stamp duty. It's something that we and other market participants regularly push for. I think it would be helpful for volumes in the market and supportive of the market health, but not something that I think the government's prioritizing at this point.
Okay.
Job cuts is also something we've been reporting on. We were hearing from some sources that about 200 jobs were set to go.
We have gone through a lot of change over the last several years. We've very successfully integrated the Refinitiv business, and as we've gone through that, there's been, I'd say, a decent amount of restructuring within the organization. As part of that, a very modest number of recent reductions in the workforce, and that's part of the change that we've been going through.
So you have let about 200 people go. Are there more job cuts to come?
So no specific comment on any future cuts. There have been a small number of efficiencies and a small number of reductions, and a number of our people have moved to other parts of the organization, but relatively small. This is a 26,000 person organization, so we're not talking about dramatic numbers here.
You're here in the region, and then I understand after Hong Kong you're visiting other parts as well. What's the role of, why are you here? What brings you here? Where does the region lie in your future?
So Hong Kong's a great market for us. We serve many of our customers here. The biggest parts of our business in this region are data business, where we provide our data and analytics to many customers, both here in Hong Kong, but also in mainland China and in the broader region. And then our index business also has a significant role here, FTSE Russell indices.
Right.
And then other parts of our business in terms of FX trading. We have discussions with companies interested in listing in London as well. And so other parts of our business, our risk intelligence business also has customers here. And then increasingly, we see opportunities for our post-trade business, our clearinghouse, where we are the leading clearer, for example, of interest rate swaps on a global basis, and that includes here in Hong Kong. And we're looking at potentially having CGBs, Chinese government bonds, as collateral.
Yes.
And that would have a big impact in terms of the markets and in terms of the flexibility for our members to use that as collateral in the clearinghouse. So lots going on for our business across this region.
Yeah, in fact, I'm glad you brought it up, because I think we were speaking with
forget his name, Eddie Yu, HKMA, of course, boss, and he will forgive me here. And I think one of the reasons he brought up that they're probably talking about the expansion of the use of CGBs, of course, as collateral, because that's the next thing that people will want to figure out. Geopolitics, and the reason I bring that up is because it doesn't seem like that is something that directly affects your business. In other words, you're here in the region. There's lots to do between your group and your various partners and the people you work with here. Why doesn't that affect you? I'm just curious how you approach this.
So if you take a look at our business model, our business is roughly 70% recurring revenue, subscription-related revenue. And most of that is tied to our data and analytics that we provide to our customers. That is not really a discretionary product. It is critical to our customers and our partners to conduct their daily activity. And so that's roughly the very strong foundation for our revenue. That's about 70% and growing. And then we have roughly 30% of our revenue that is tied to market activity. And whether that's equity trading, FX trading, fixed income trading, the clearing of government bonds, repos, the clearing of interest rate swaps, clearing of other derivatives and securities, that tends to go up when there's market volatility. And so if you think about that business model, geopolitics have an impact on volumes, concern about inflation, interest rate movements.
We need to cut you off there. David Schwimmer there, CEO at the London Stock Exchange. For plenty more ahead, this is Bloomberg.
It's 11:29 a.m. in Tokyo. Japanese markets just about to go on their lunch break. Today in the session, we're really seeing the moves being driven by a handful of stocks in particular. Tokyo Gas, for instance, standing out. We've got reports that Elliott has taken a stake, the activist manager there. Kadokawa, shares rising after reports of a Sony deal. And 7 and I, of course, because we're getting this report that the Ito family could take that business private. So as we were talking about with our Bloomberg reporter Alice French before, really this is a market, if you change on the broader topics, is being driven by just a handful of gainers in the session today. Because actually when you take a look across the broader Asian complex, it's fairly sideways ahead of what are very key events later on. And Nvidia, of course, standing out and what they signal, given, of course, some of the major companies in Japan are suppliers into that company in particular.
Yeah, and certainly to Belle's point, what's true in Japan is true for the rest of the region today, where really we're trading sideways, including major parts of the Chinese equity market. This is really a snapshot, and quite literally, I think it's split 50-50, almost in the middle here, as far as sector winners and losers are concerned. S&P futures are seeing a bit of a bounce. The dollar is softer ever so slightly, and the Bloomberg Asia Dollar Index is ever so slightly higher, 0.001%. Right. Now, back here to what's taking place here in Hong Kong. So, a former Hong Kong newspaper tycoon, Jimmy Lai, we understand, in fact, has or is already beginning his testimony in court as we speak. Now, he's defending himself against national security charges with his first public statement since being arrested back in December of 2020. Now, Lai's case is being closely watched in Beijing and Western capitals, with the U.S. and the U.K. calling for his release. Now, on Tuesday, a Hong Kong court jailed 45 former democracy activists for conspiracy to commit subversion, with sentences ranging from 4 to 10 years in prison. Now, the U.S. has criticized the sentences and had already threatened visa curbs on Hong Kong officials.
No one should be allowed to use democracy as a pretext to engage in unlawful activities and escape justice. Certain Western countries ignore the fact that they maintain their own national security through judicial procedures, but unreasonably criticize Hong Kong courts for failing implementing the Hong Kong national security law. This severely violates and tramples on the spirit of the rule of law.
Let's get more on this now with Emily Lau. She's a member of the Hong Kong Democratic Party and former lawmaker here in the city's Legislative Council. Emily, thanks so much for joining us. And we know that you can't comment on the Jimmy Lai case, given it is ongoing, but it has been a very monumental week, really, because of the actions yesterday, and we saw the dozens of pro-democracy leaders that were jailed in some cases, or one case up to 10 years. What would be your reaction on the events?
Well, I think what happened yesterday was not that surprising, but to me, my party members, their relatives, is very, very distressing and devastating. And actually, before that, some people, whether it's in the business community, in the diplomatic community, and others, they say, oh, well, actually, the administration is trying to revive the economy, which is what Bloomberg is concerned about. Then what you need to do, and the administration said, now it's very stable, very peaceful. So we're going to turn over a new page. So people had some maybe wishful thinking that yesterday may trigger that, a new page. But of course, that was not to be. And people felt very distressed. And I think even business people and others looking at that, say, hey, how are you going to energize the Hong Kong people, make them feel happy? They will go out and spend money to drink, to eat, and so on. But now, I think people feel very depressed. And then the Secretary for Security, Mr. Chris Tang, said they will look at the sentencing, the judgment carefully to see if they will appeal. So maybe they think it's not heavy enough. So we'll wait and see. Of course, the defendants can also appeal. But so it just makes the atmosphere so heavy. Because I don't mind people making money. I'm more in favor of that. We are a financial business city. And when I saw the British Prime Minister, Sir Keir Starmer, meeting President Xi Jinping in Buenos Aires, I said, no, I don't mind people making money. But I want the Chinese government and the British government to remember the 1984 Sino-British Joint Declaration, maybe before you were born, and the 1990 Basic Law that Beijing promulgated for Hong Kong, which promised us, everybody, a capitalist city, one country, two systems, freedom, personal safety, the rule of law, so we can continue to flourish. Now I think things look very tricky and very difficult.
Well, personally, I'm kind of hurt that you only pointed to Annabelle there with a 1984 reference there as well. So, Emily, here's the thing. So, I was at the HKMA Financial Leaders Summit yesterday, which was taking place alongside when the decisions came out for the 45. And the sense I got there was that because things are stable, things can proceed economically. The question I have for you is, how do events yesterday, in your view, handicap the government's ability to deliver economic measures?
Well, of course, some business people, financial people may say, oh, we don't care about those political, whatever it is. But there are other business people who have told me and others, they say it's the whole environment. Because when you're in business, big money, you're going to do research before you invest. And you may step on the red lines. And you just don't know. So what they want to see is a really more relaxed environment. So a former government senior official, Professor Anthony Cheung, who worked with CY Leung, he recently came out and said, hey, you should relax the whole thing. Let people demonstrate, let them march, show that, we are back to the old days. But government said no. So I don't know. I just think that if we want to be, and I certainly want to be, my party want Hong Kong to be a prosperous financial center, business center, and so on. But some people told me, they say Beijing has never run a capitalist city, ever. How do they know how to do it? But now they're doing it. But for a capitalist financial center to thrive, you need certain basic things. Freedom of movement of people and money, freedom of access to information, personal safety, the rule of law. And some people say, oh, yeah, we still have sort of those things. Otherwise, I can't be here. You can't do this interview in mainland. But it seems these basic values are evaporating. So what they need to do is to show, oh, we're really going to turn a page where there's political freedom, economic freedom, social freedom. People can enjoy it like a few years ago.
Well, I'm curious, and maybe people who are tuning in right now across the world are probably curious as well. Hong Kong Democratic Party member, what do you guys do now?
Well, we were not allowed to take part in the district council election last time. We're not allowed to do fundraising, so our money is dwindling.
Right.
And
well, what's keeping you busy is my question. What are you not allowed to? What are you busy
we're trying to hold a banquet, 10 tables for our party members and friends. And the restaurant said, oh, sorry, we have to cancel your booking because we have no gas, because the chef in the kitchen are fighting. Come on. If we can't even hold not 100 tables at the convention center, 10 tables in an ordinary restaurant, and that's being thwarted, what would the people in Taiwan think? What would all the business people think? In fact, the restaurants, which many are not doing good business, they would love to have our business, but they were forced to cancel at the last minute and say, oh, Democratic Party, sorry, cancel the booking.
I know that you visited some of those pro-democracy activists in jail, or whilst they were detained. Some of them will be out soon.
Maybe next year, not that soon.
Well, okay, within 2025. Where do you think they go next?
I don't know. I just hope, whether they are those pro-democracy people and also the young people, because since 2019, more than 10,000 people have been arrested, and many of them are young people. And out of that, several thousand have been prosecuted. Some have gone to jail, and some have even come out. And there are many young people. So all those people who have served the sentence, I think they should be given a chance. But I keep hearing nasty stories about companies who would not hire those people, or people who graduate from the universities during 2019 because they think they are too yellow. So, again, it's up to the business community, up to the administration to give these people, once they serve their term, a chance, and not to cast this huge shadow, not just over them, but their families and friends. And so I urge the employers, the administration, to take a more relaxed view. We are now quite stable, peaceful, no demonstration, no march, no petition. Give Hong Kong a chance to thrive and prosper.
Emily, on that note, thank you so much for taking the time. We appreciate you coming in. Emily Lau there, Hong Kong Democratic Party member and former LegCo member. And we continue, of course, to reach out to all sides for this story. If you're a Bloomberg subscriber, you can catch this interview or others that you might have missed on your TV function, TV Go, on your Bloomberg terminals. Join the conversation. Send us instant messages to our team, some questions for our guests during our live shows. Check it out, TV Go. This is The China Show. Good morning.
Well, the CEO of the world's largest zinc smelter, Korea Zinc, says he's working hard to regain shareholder trust after being forced last week to scrap a $1.8 billion share sale. Our Chief North Asia correspondent, Stephen Engel, joins us now from Seoul. And Steve, as we were discussing, you had the chance to sit down with the leader of this business and share not just about that share sale, but also about the role that this company needs to play into the future, given geopolitical tensions.
Yeah, absolutely. I mean, this is the corporate takeover drama that has captivated Korea right now, of course, because it's unique hostile takeover bid between two rival families that really came from the two co-founders of the conglomerate that dated back to 1949, when they both left North Korea, came to South Korea, set up the conglomerate, and then became Korea Zinc by 1974. But then those rival families now are fighting. You have the Chang family, backed by MBK Partners, which is a private equity firm, trying to wrestle control away from the Che family, and Yoon Che, who's the CEO and current chairman right now, whom I spoke to. He says he did make a tactical error in launching that share sale and scuppering it just a week ago because of the investor revolt, if you will. But he's learned the lesson. He wants to bring more transparency and disclosure into the their Chable boardroom. He wants more essentially governance, better governance. They're going to appoint an outside chairman, a foreign director as well, to bring more transparency into the boardroom. They're going to increase the dividend as has been called for. But more importantly, he says he's going to win this battle when they're going to have that EGM perhaps by the end of this year. So all eyes about a month from now here as investors and those sort of quiet shareholders will have their chance to vote on who should lead this conglomerate. But you're absolutely right, Annabelle. The other side of this is the fact that Korea Zinc is such a vital player in the key elements that go into all the technology, into semiconductors, into EV batteries and the like. In fact, Yoon Choi has essentially led this Troika drive to be a leader in recycling, in many areas of the new greener economy, including parts and elements that go into batteries. That's a key, electric vehicle batteries. So that's a key component. When I asked him about Donald Trump coming in and perhaps changes in how the United States looks at the EV front, this is what he had to say in this exclusive interview that lasted, I have to say, more than 2 hours.
I think it's obviously unclear as to how the Trump administration will change IRA, for example, or strengthen the definition of FEOC, foreign entity of concern. I think there are some things that we can be sure of, which is he will be tougher on China when it comes to importing goods that are produced by China or entity that is controlled by China in one way or the other. And without passing any sort of judgment on that, on that trend, what we have tried to do with our nickel refinery with Chemco is to build. So we studied nickel market for a long time. Nickel market is a much smaller market than zinc market or copper market, lead market, but it is much more complicated than any of those markets in the context of the new geopolitical environment, where countries like U.S. or Europe can, if they are going out to the world and looking for nickel that is produced by non-Chinese party, they're going to have a very, very short list, and we're going to be on the top of that list.
Where do you stand right now as far as the concerns that have been expressed from Korea Zinc about MBK and what some would say maybe is the opaque nature of its capital base and whether it is tied to Chinese capital? They have denied it. I've heard back to September they've denied, because the concern, I guess, with the government would be that now that they've basically named, national core technology as the precursor process for zinc, does that help or hinder you? Because that would, I would assume, prevent such technologies in your assets to being bought by the Chinese.
So we're in the process of the technologies that just have been certified as a national core technology, I should say, are just tips of the iceberg. There are hundreds and hundreds of technologies within our organization that are integral to run the business as we do. And I think some of the important ones we will again apply for the national core technology certification in a near future. But I think, that's a good question. Whether or not this helps us or hinder us, I don't think it does either. I think it ensures that some of the technologies that Korean government finds nationally important for national security reasons and whatnot can partially be protected in the event of a sale to a foreign entity. But there are many ways in which technologies can be leaked out to an outer party.
But how much of a national security threat would a management change actually be? You're the biggest zinc smelter outside of China with about 12% of the market. Sulfuric acid also, which is a key component to cleaning silicon wafers for the semiconductor industry. Antimony is another element.
Antimony is getting much more pricey these days, yes.
Really controlled. I think 64% of the market shipped out of China. They're trying to control that as well.
They've banned export. Recently, I think.
Yeah. So what happens if Korea Zinc falls into the hands of the Chinese?
Well, Chinese or Martians, I don't think it really matters for the purpose of our conversations. But I think it is extremely difficult for somebody else who do not share the religion to run the company as we do.
So as you can see, it's not just corporate Korea that is watching this takeover saga with great interest. The world's supply chains are looking at it as well, and the geopolitical segmentation, if you will, of the supply chain is a key focus of whomever will be in control of Korea Zinc following that EGM and that vote coming at the end of next month, likely.
Stephen Engel, our Chief North Asia correspondent in Seoul for us. Commodities and geopolitics certainly mix in a very interesting way. That's our next story, of course. A Bloomberg analysis of our nearly 5 years of satellite images shows a vast shipping hub off Malaysia that actually funnels billions of dollars of sanctioned Iranian oil into China. So this clandestine network is the subject of our big take today. And for the details of the story, let's bring in our Bloomberg Global Business Senior Reporter and the host of the Big Take Asia podcast, Juan Ha, to take us through this. And so what do we know about this dark fleet of tankers?
It's really quite remarkable, right? Our colleagues analyzed almost 5 years of satellite imagery, and they found that the largest gathering of dark fleet oil tankers in the world is off the coast of Malaysia. And what we suspect is that many of these ships picked up sanctioned oil in Iran, met up in Malaysia, where they transfer the oil to another ship that takes it then to China. And by conservative estimates, we're talking about 350 million barrels of oil this year, almost $20 billion worth. It's huge. Wow. What's interesting is that, they looked for a very unique pattern of these ships that are side by side for hours at a time. And when you combine that with, the fact that many of these ships actually were trying to mask their location, a lot of the experts say that's a telltale sign that illicit operations are happening. So it's huge.
And is it a ramp up that we're seeing in activity to try and evade sanctions, or is this something that's possibly been going on for longer than 5 years?
Possibly longer. I mean, we know that the dark fleet has been around for a while, but in 2018, the U.S. reimposed sanctions on Iran. So Iran, of course, is now desperate to find willing buyers. Then you've got China, which doesn't recognize the U.S. sanctions. It's, wants to find a way for its small refineries to get a hold of cheap oil. So it's a convenient cover for a lot of these, Chinese corporations that might be engaged in this. But what's really interesting is that when you look at the data, China doesn't show that it's imported a single barrel of oil from Iran. But its imports from Malaysia has shot up through the roof, so much so that, Malaysia doesn't have the capacity to actually handle that kind of numbers. So right. The numbers don't add up.
Yeah, so we know the data is pointing to that. Do we need to look for someone who might be able to, who should be stopping this? Or is this, I mean, to your point, China does not recognize the sanctions. So is this, I guess, in many ways, fair game?
Well, I mean, the U.S., of course, is pressuring Malaysia to really tackle the problem, but Malaysia is also seems very motivated to do it. In fact, at a Bloomberg Economic Forum last year, Anwar Ibrahim, the Malaysian Prime Minister, basically denied that these transactions of oil transfers are happening, says they don't have the resources to monitor it. But it's a huge problem. I mean, a lot of the maritime officials and experts are really concerned because when you've got this dark fleet of ships, they're masking their location. Collisions have happened. It can happen again. And the environmental damage, right, if these ships leak is huge. So the risks are really high.
One really fascinating story. That's our Bloomberg Global Business Senior Reporter and host of the Big Take Asia podcast, Kay Wanha, this morning. And a story available online and on the terminal as well. But we'll have more ahead. This is Bloomberg.
Welcome back. Just a brief look at some of the related assets to, of course, what took place in Ukraine and Russia yesterday and the story there. So, there's a nuance here. So we are seeing some of the havens sort of pare back, except gold, which is, as you can see, off highs of today, but we're still higher than the levels of, I think, 24 hours back. From other things as well, dollar-yen is pulling back a little bit. And, of course, the 10-year yield, which did see a drop yesterday, is trading at about those levels, right? S&P futures are calling slightly higher right now. Nvidia, of course, is coming out with earnings, and that's probably the next catalyst for these markets here. Right, just ahead. on the show.
Yeah, big guest coming up as well, because we're going to be hearing, or has Linde, our colleague, speaking exclusively with the Oaktree Capital Management co-chairman Howard Marks. They're going to be looking at the macroeconomic landscape, of course, those events in Russia, and as well what Trump will do when he prepares, or in his preparations, to return to the White House. That's it for the China show. Stay with us for Howard Marks and much more. This is Bloomberg.